The Federal Reserve just said this, which is pretty much a whole lot of nothing. Nothing burger, pretty much, in this FOMC statement. If you've been reading these statements over the course of the last several months, they've pretty much been saying the same thing over and over and over again, which is pretty much par for the course for many of these FOMC statements. Now, many people were expecting them to talk a little bit more about the potential purchases they've been doing, and the potential for tapering, or talking about tapering, as many people have stated. Now, this is pretty much what they said. Last December, the committee indicated that it would continue to increase its holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion a month, until substantial further progress has been made towards its maximum employment and price stability goals. Now, as far as inflation is concerned, they basically have been saying the same thing over and over again, which is, hey, this is transitory. Now, recently, they've been saying things like temporary in their, or Jerome Powell has been saying things like temporary in their, official face-to-face press meetings. However, they use the transitory word again, which again leaves many people wondering, well, how can you keep saying this word transitory? They updated it to temporary in some press releases. Now, here's the thing. So they largely are focusing on what happened in the past, stating inflation has risen, largely reflecting transitory factors. Overall, financial conditions remain accommodative, in part reflecting policy measures to support the economy and the flow of credit to U.S. households and businesses. Now, because of that, they don't really seem too pressed about everything that they've been seeing as far as inflation is concerned. However, this will likely change, as we've talked about many, many times before on this channel. Let's take a look at what was released yesterday, which was the United States S&P Case-Shiller Home Price Index. Now, for those of you who are savvy, you know where I'm going to go with this, which is the CPI, the PCE. The PCE is what the Fed looks at as far as inflation is concerned. Weighs housing heavily, shelter heavily in their indexes, in the PCE and in the CPI. Now, we'll talk a little bit more about that soon, but that has a lot to do with the home price index, because here in the home price index, we had some pretty strong activity. The 20-city home price index in the U.S. increased 17% year over year in May of 2021, pushing the index to a record high. This is important. It compares with upwardly revised 15% growth in the previous month and market expectations of 16.4%. Among the 20 cities included in the index, prices increased the most in Phoenix, followed by San Diego and Seattle. The strength in the U.S. Housing market is being driven in part by the reaction to the word we can't say on Twitter or on YouTube because it'll kind of flag this video, as potential buyers move from urban apartments to suburban homes. May's data continue to be consistent with this hypothesis. This demand surge may simply represent an acceleration of purchases that would have occurred anyway over the next several years. Alternatively, there may have been a secular change in locational preferences, leading to a permanent shift in the demand curve for housing. So this came from Standard & Poor's. Now, why is this important? Well, those of you who are savvy know that OER, which is a large percentage in weighting within the CPI, which we'll talk about here, which stands for Owner's Equivalent Primary Residence, makes up a large part of inflation and inflation measurements. Now, this is important because it tends to lag home price, the Shiller Home Price Index. So when the Schiller Home Price Index goes up and steepens, you might see that the OER is still kind of lagging, and then eventually it'll go up itself. Now, we have yet to see any of that take place and take hold in the CPI readings yet. It has yet to show up at all. And we know that these record high prices that we've been seeing in home prices will eventually show up in OER. Now, what exactly is OER? Take a look at this. And there's also an explanation of how you can see it in inflation measurements. Now, OER is a part of the housing percentage, which is 33% weighted in the CPI. So let's go down here. The CPI calculates the owner's equivalent of primary residence. Instead of the monthly mortgage payment for those who own their homes, the OER is what the owners use to predict how much the rent would be if they rented the home. The CPI could give a false low inflation reading due to low rents, even when home prices are high. This is sounding pretty familiar. Kind of what I've been talking about. Home prices are high. Eventually OER will catch up. Let's continue. Low rents can result from fewer renters and increased vacancies as low interest rates spur more home purchases. Sounds like what's been happening recently, right? At the same time, housing prices could rise due to increased market activity. This is why the CPI didn't warn of asset inflation during the housing bubble of 2005. So, all this to say, the Fed is looking at things in the rear view as far as how inflation has been playing out within the economy. However, I think they need to be taking a look at what is to come and to let people know, hey, looking further down the road, OER, which is heavily weighted in the CPI, and also housing is heavily weighted in the PCE, which is what the Fed looks at. This may be an issue coming down the pipe or the pike, whatever that saying is. Be prepared. But no, they don't want to scare the American populace. They don't want to, freak out essentially the world with that statement. So this is essentially what the Fed just released. Whole lot of nothing in there. And of course, using the same old language regarding transitory inflation, but no new updates as far as tapering of asset prices. So there you go. Let me know what you think in the comments section below.